All right, let's get right into it. What we're talking about today is one of the biggest economic showdowns of 2025. Picture this. You've got the Indian market, this absolute fortress built on some seriously impressive homegrown strength. But on the other side, there's this massive global storm just hammering away at the walls. This is the story of that siege. And really, it all boils down to this one big question. What happens when that global storm crashes against this economic fortress? Can India's incredible internal momentum actually hold up against all this pressure from the outside? The answer to that, well, it's pretty much shaping the future for one of the biggest economies on the planet. So, to really get a sense of just how strong this fortress is, you got to look at this number, 8.2%. That was India's GDP growth in the middle of 2025. And look, that's not just good, that is staggering. It completely blew past what anyone was expecting. Analysts around the world were, frankly, shocked. Okay, so you've got that explosive growth number in your head, right? Now, get this. Right after that, we see headline inflation, the overall price rise in the economy, at just 0.71%. Wait, what? High growth and practically zero inflation? That's not supposed to happen. And this, right here, is where our story gets really interesting. Yeah, this is what economists get all excited about. They call it the Goldilocks scenario. Not too hot, not too cold, just right. And for a country like India, finding the sweet spot is incredibly rare. It's basically a perfect storm of good news, and it creates this ideal backdrop for the market. It gives the central bank a ton of room to maneuver and keep supporting that growth. All right, section 1. Let's dig into this economic surprise. We're going to go inside the fortress walls and see exactly what's firing up this incredible engine. And wow, when you look at the pillars holding this whole thing up, you see the growth is, well, it's everywhere. This isn't just a one-trick pony. You've got manufacturing up over 9%, services flying, even finance and real estate are hitting double digits. And super important, agriculture is stabilizing. This is a healthy, broad-based expansion through and through. Okay, so India is absolutely hitting its stride. Everything's looking great. And then, boom, the global storm arrives. A massive shock from the outside that threatens to throw a wrench in the whole machine. And, it happened fast. We're talking about the span of a single month. August 2025, U.S. tariffs on Indian stuff went from being a problem to a full-blown crisis. They didn't just go up, they doubled, from 25% to a crippling 50%. This wasn't some polite trade dispute anymore, this was a trade war, and it was declared practically overnight. So the big question is, who's in the firing line? This chart lays it out pretty clearly. You look at sectors like textiles, apparel, gems and jewelry, they were in immediate crisis mode. The U.S. is their biggest customer, so a 50% tariff isn't just a headache, it's a potential business killer. Some sectors, like pharmaceuticals, got a pass, but for many, the damage was severe. Now, logically, with this kind of shock, you'd expect foreign investors to panic and run for the hills, right? And you'd expect the market to just collapse. But that's not what happened. A completely different story unfolded. A new hero stepped up to defend the fortress, the everyday domestic Indian investor. Just look at this incredible switch. You have foreign investors dumping a record 1.51 trillion rupees worth of stock, a massive sell-off. And what did domestic investors do? They just absorbed it all. They bought every single share and then kept on buying. This is huge. For the first time in history, domestic players now own more of the Indian market than foreign institutions. That's a fundamental shift. So you're probably asking, how is that even possible? Where did all that money come from? Well, the answer is a phenomenon that analysts are calling the SIP wall. Think about it like this. Every single month, millions of regular Indian savers are putting their money into the market through these things called systematic investment plans, or SIPs. We're talking a relentless flow of nearly 30,000 crore rupees. That's almost $4 billion every single month. It creates this giant wall of cash that basically puts a floor under the market. Okay, so this epic battle. The global storm on one side, this domestic SIP wall on the other, it's had a really fascinating effect. It's basically split the Indian market clean in two. And you can see that divide perfectly right here. On one hand, you've got sectors that are all about the domestic Indian story, like auto, up a healthy 21%. And on the other hand, you have the globally exposed sectors, like IT, down 10%. It's literally a tale of two different markets living under the same roof. So here's the key takeaway. The big winners are the companies focused on Bharat, that is, the domestic Indian economy. We're talking about companies like Eicher Motors, selling those iconic Royal Enfield bikes to millions of Indians, or Trent with its Zudio stores popping up everywhere. These guys are booming because, frankly, they're insulated from that global tariff mess. And the laggards? No surprise here. They're the ones whose fortunes are tied to what's happening outside of India. The entire IT sector is nervous about a US recession. And of course, the textile and gem exporters are right on the front lines of this tariff war. Their fate is tied to that global storm, not the calm inside the fortress. But what's really fascinating is that this split isn't just between sectors. It's happening inside India, too. There's a huge consumption divide. Out in rural India, demand is surging, up almost 8%. Why? Because food prices actually went down, which is like getting a tax cut. It leaves more money in people's pockets. Meanwhile, in the big cities, urban demand is actually slowing down because the cost of services like education has been pinching wallets. Okay, so you've got all these massive forces pushing and pulling on the market. The big question is, what happens next? Where do we go from here? Let's look at 3 possible futures for India as we head into 2026. Basically, analysts are mapping out 3 main scenarios for India's benchmark stock index, the Nifty. First, you've got the bull case. A trade deal gets done, the tariffs go away, and the market just takes off, maybe hitting 29,000. Then there's the base case, the most likely one. The market just kind of gets used to the tariffs. It becomes the new normal, and domestic strength keeps pushing things up to around 28,100. And then you have the bear case. The trade war escalates, things get ugly, and the market could fall back to 24,500. So what are the odds? Well, this is what the experts are thinking. They're putting a 50% chance on that base case, where the market just keeps chugging along. Add in the 40% chance of the bull case, and you're looking at a 90% probability that this domestic fortress basically holds strong. The odds of a real collapse? Pretty low, only about 10%. And this quote right here, it just perfectly sums up the massive change we've been talking about. What it's saying is that the Indian market isn't dancing to the S&P 500's tune anymore. Instead, its fate is now tied to things like Indian GDP and how much Indian households are saving. Its destiny is being decided at home, not in New York. And really, that is the most crucial point to take away from all of this. The whole center of gravity has shifted. India's own internal strength has become its primary driver, acting like this powerful shield that lets it forge its own path, even when there's chaos raging in the global economy. Which, of course, brings us right back to where we started. We've seen just how strong India's domestic fortress is, but we've also seen how powerful that global siege is. The battle is far from over, and the big question hanging over everything as we look ahead, is that fortress really, truly strong enough?